Hello and welcome to Chartwise Women. My name is Erin Swenlin from DecisionPoint.com, and I am here with my friend Mary Ellen McGonagle from MEM Investment Research. And we are here to help you bridge the gap in your investing. We want to take our knowledge and wisdom and reach our hand out to you and help you walk across that bridge so that you can become a savvy investor like I think we are. So,
Oh, yeah.
how are you doing today?
We're certainly experienced. Yes, I'm doing quite well. Very nice. Not too much new here. I am just watching the market action closely, and I think today's topic is going to be really interesting, something that people can use throughout the year, really. Lots of great tools that we're going to be sharing today.
Absolutely, we will. And so my question to you is, how are you feeling about the market right now?
Well, I don't have a lot of fear
Mhm.
because I have taken steps to reduce my exposure. But otherwise, I am feeling a little cautious, I would say. Yes.
Absolutely true. We constantly talk about price action, and we've talked about a lot of the technicals. And today's topic, our anchor point, is all about investor sentiment and how investors feel about the market. Are they fearful? Are they exuberant? Things are great. Are they kind of cautious, like you're talking about, Mary Ellen?
Mm-hmm.
And what I found in doing my studies of sentiment, I study it quite a bit. I haven't used it as much as I should because it is an excellent tool, to help you with understanding where price action might go. A lot of people talk about how price is really the movement of price. A lot of it is measuring the emotions of all of the players within the market. So, seeing when people get really nervous or seeing when people are really excited, a lot of times that is going to point you right to a reversal. So, Mary Ellen, before we get into chart chat, I know you brought an excellent example of what we're talking about as far as investors and how they feel about the market, or sentiment, which is our anchor point. So I thought I'm going to show this chart and definitely give me your, just discuss it as we go.
Yeah, absolutely. So we're looking at the typical cycle of an investor, particularly as they begin their journey into putting money to work in the market. So your initial feeling is going to be optimism. Of course, you're hopeful. You think your stock is going to head much higher, and it does. And from there, you get rather excited and then even thrilled as your stock continues to climb. You hit a period of what we would call euphoria. And there are a lot of people, certainly toward the end of this year, we're seeing some signs of euphoria. And that is concerning because inevitably during that euphoric period, oftentimes there will be a pullback, whether it's some sort of catastrophic event, some news that drives the markets lower. And from there, of course, you are going to begin to get anxious. Your stock is starting to head lower, and then you start denying. If you're looking the other way, you think, well, gosh, that's not happening to me. It turns to fear. And once we get down to that desperation and panic area, really you are just not in a good place at all. And from there, they show that character with the white flag, and that's when you give up. You sell your stock, it's going to be at a loss. And of course, you're not going to feel good about it at all. This is a type of cycle that is very common, but unfortunately for a lot of people, it does keep them out of investing because you don't want to lose capital. You losing your confidence is what is occurring here, and that is just not good as far as being successful. So then from there, the markets do inevitably turn back. Sometimes it will take longer than others, and you get back into that optimistic phase. So from all of this, this is something that we've talked about, Erin and I, over the many weeks, the concept of having a system in place, a system that you believe in, that system will help you really put those emotions aside. And if you are just starting, I know it probably feels impossible that the emotional side is ever going to leave. It's your hard-earned money, but I am here to tell you it does dissipate over time as you continue to believe in and follow your rule-based system.
And this is just a natural occurrence as well, emotionally for humans. So we're not going to be able to take all of the emotion out of this. This is, investing implies risk. Those kinds of things are going to, inevitably make your trading, a little bit euphoria, fear, depression. I mean, I wouldn't feel bad if I were you, if you do go through some of these stages. But the key is that when these stages start to the downside, time to just get rid of it and not wait for the denial, the fear, because you can see, even though you started this price, you had it way up here, but if you, instead of deny what's going on, and that is where you decide to sell, that is going to at least give you a little bit of gain. So, a lot of this is going to be present. It's present when I do my own investing. It's my money. And, I do have my system in place, but that doesn't mean that I'm unhappy, not unhappy if I take a loss. And it doesn't mean that I'm not running around all excited when my stock is doing well. It's just we want to be able to control our emotions, right?
Exactly.
And
Yeah.
I think as women, we have an advantage with that a little bit.
I would believe that. And the fact of the matter is that when making decisions from an emotional point of view, an emotional state, it's just inevitably not going to be the right decision. So,
Yes.
yes. So from
Well, and
here,
people, talk about women being too emotional. But what I find is that because we deal with emotion all the time, just, with the way we're built, I suppose, we are more familiar with those emotions. We're able to keep them under control or recognize them. If anything else, generally you're going to recognize them. And that's going to be the key, is recognizing when these emotions are hitting those peaks and valleys, because that is going to be normally the place of a reversal. It'll also draw you into different asset classes. And I know that we're going to get a little bit into that in Chart Chat.
absolutely.
So
Absolutely. Yeah.
I would like to pass the baton to you, and you can start talking about some of the sentiment measures that you use, or just looking at those asset classes.
You bet. So, in essence, what I'm going to be sharing with you are some asset classes that can tell you whether the markets are under duress. Is investor sentiment fear-based? And one of those clear-cut signals can be just taking a quick look at the yield on, for in my case, the 10-year Treasury yield. And oftentimes this is a chart of the yield on that 10-year Treasury, and yields actually fall in reverse to the actual price. So when you see yields drop, that means that there is heavy interest in bonds. And we did see this. I'm taking us back to a period in November when there was a drop. So what I am going to be sharing with you is this chart of the 10-year yield. And it's going to be really insightful as far as where market sentiment is. Of course, treasury yields do trade on point with other characteristics, but today I'm sharing with you when the markets get fearful. And we can see in this case, there was in November the announcement of a new variant of COVID. And on the last day of a holiday week, we did see a very sharp drop in yields. This was a flight to safety. And from there, we did see the markets recover a little bit, but then into that next week, that fear came back. A lot of it had to do with Federal Reserve Chair comments that were also centered around that new Omicron variant. But again, this significant drop here. So this is one way that you can really tell whether the broader markets are in a period of fear. Oftentimes this will occur in uh, congruence with a drop in the stock market. I'm going to share with you another area of the markets that has surprisingly become a safe haven. And this has been written about a lot this year, and that is cryptocurrencies. Did not think we would see this still debated type of currency being viewed as a safe haven. But on that same day that we did see the markets drop significantly, we did see a rally in some of these Bitcoin related stocks, particularly Ethereum. That's gaining a lot in the way of respect, if you will. And then one other area that is a real proxy for letting you know whether the markets are in a period of feeling confident about the markets, and that is small cap stocks. We're looking at the Russell 2000 index, IWM. This is a daily price chart. And we can see here in this particular period, this very significant drop here. And this again was during a fear-based period. Small cap stocks are risky by nature. They are certainly smaller. They are going to be more volatile. So during periods of confidence where investors are confident in the near and longer term future for the markets, you will see an inflow into small cap stocks. And one last area that is also very risky and can be really foretelling as to the markets and investors' appetite toward risk. This is biotech stocks. Out of 570 biotech stocks, about 18 have earnings. Most of them are very, very speculative in nature. So during periods of market confidence, you will see biotech stocks rise. And then as fear, uncertainty comes into the marketplace, the appetite for these biotech stocks will be reduced. And we can also take a look at, Erin, I wasn't sure if you were going to look at some of the defensive sectors. I believe you are going to be covering that maybe because
I am
that's
going to be looking at actual sentiment measures that I have, surveys, etc. So go for it.
okay. Yes, I'm very quickly just going to take a look here at stockcharts.com. There is a way to just very quickly assess where sector sentiment is. And what I did want to go ahead and share with you is some of these really risky, less risky areas that are viewed as defensive. This is consumer staples. Unfortunately, it is dropping significantly today with the markets. But what I did want to point out to you is during periods of fear-based periods in the market, you will see money flows into these more defensive areas. Of course, consumer staples is going to be items that we need regardless of perhaps the economy or the stock market. So we can go back historically and take a look at some of these upward trending periods. Utility stocks are viewed as another area as being defensive. And again, those periods of flows into are generally coinciding with fear-based periods elsewhere. So, Erin,
Yes, that sector rotation, and I'm sure we've done a show on sector rotation before, money flows recently, and definitely there are those defensive areas of the market, utilities, real estate to some degree. We found during the COVID crisis that technology actually became a defensive area.
Yes, we talked about that. The need was there in spades. People needed to be connected, and so it did become a staple stock in essence. Yeah.
Yes. And it's typically has always been considered more of a aggressive area of the market because you know, that's where you have all of your growth stocks.
All right, let's take a look at some of your sentiment signals.
So I'm going to start off with one that everybody's pretty much familiar with, and that is the VIX, the volatility index. And we often talk of it as a measure of fear within the market. So you can see I flipped my VIX, and mainly that is so that I can see those oversold readings, which is when the VIX gets very, very high, and the overbought readings when it's very, very low. So when it's very, very high, everybody is very fearful, there's problems with the market. You can see that we're having some issues currently in the markets. And what you'll find is that when everybody gets extraordinarily fearful or extraordinarily exuberant, that's when you're going to start seeing those reversals in price. And with the VIX, it's very easy to check it out. I'm looking at just some of the market tops that we've had prior right here. I could do the same with the market lows, but notice that the VIX is very low in reading or high on my inverted scale before these reversal points. And it's almost, I mean, it's pretty much like clockwork, if you will. When they get, it gets very, everybody's feeling pretty good about the market. And then on the flip side, of course, when people are very nervous about the market, that's when you start to see those reversals to the upside. So sentiment is contrarian. If people are fearful, that means that you're going to see a reversal because everybody is afraid. And now that's when the market will make its reversal. The other charts I had to show you is just some measures of what our sentiment looks like. This is the National Association of Active Investment Managers. So these are the big money guys, and it tells you their exposure to the market currently. And as you can see, where we're looking at these market tops, typically you're going to see a lot of exposure. The higher the green bar, the more exposure. So that means that they're feeling good about the market. They have a lot of their money in it. And usually, again, this can be when you're going to see some of those reversal points. Wow. Another one that I have is the AAII, the American Association of Individual Investors. You can actually go to their website and put your vote in. I'm bullish or I'm bearish. And then they take this and we measure how many are bullish versus how many are afraid. And then I take a quick ratio of the bulls over the bears so that I can see when people are very, very fearful and when people are very, very complacent, if you will. And typically you're going to find those reversal points on that kind of sentiment data. And the last one I'm going to show you is the 10-day moving average of the put-call ratio. And this one, I do invert again, because to me, overbought's on top, oversold is on the bottom. And so when I have a low reading, it's oversold, that means the market's going to switch to the upside. And again, here are some of the major tops in the market. And you can see that when that put-call ratio gets very, very small, that means you have a lot of people who are bullish. That's when you're going to get that reversal. So ultimately, it's just a matter of when people are very fearful, you're going to see a market reversal to the upside, which is why we're kind of in that position right now with the market here at the end of 2021. So that's about it for the chart chat. Let's go ahead and we're going to take a quick break and we will be right back. Welcome back to Chartwise Women. Today, our anchor point is all about investor sentiment. How do you feel about the market? Which is an unusual technical term, right?
Oh, right. Yes, we need to maybe get a little more technical with that. So how is your reading on the markets?
Right, exactly. Fear, complacency, we just were talking a lot about that. We showed you some charts previously before the break, but now we want to bring you into our wisdom of the week. This is where we look back on our experience and try to give you our wisdom that should hopefully help you moving forward as well. And Mary Ellen, I'm going to let you start with yours and then I will finish with mine.
Oh, you bet. Yeah. So my wisdom of the week is all about investor sentiment. And it is the fact that sentiment among investors will ultimately be the driver of price action. And that can be professional, personal investors. And the reason is this sentiment. A lot of times you'll see the economy is expanding, everything looks wonderful, but investors are fearful or not buying it, the markets will go down. It's not going to take so much into account what the good news might be out there. So you do want to always be on top of that sentiment as one way to gauge the direction of the broader markets.
All right. My wisdom of the week is to tell you and remind you that sentiment is contrarian, meaning when everybody is bullish or everybody is bearish, everybody hops on that bandwagon, the wheels are going to fall off. And that's what causes those reversals in the price trend. So you want to pay close attention to sentiment, just because if everybody seems to be all on one side, that should put you in a cautionary mode. And so that's what we're talking about, following the sentiment and our wisdom of the week.
Yes, I think our next show should be all about uncovering those reversals. How about that?
I like it. I think everybody would love to see how we can find when that's going to be happening.
Absolutely.
I know right now with the end of 2021, we've got all of these different variations of the COVID virus coming out. It's starting to spook the markets. I don't know about you, but I heard somebody, Linda Ratchke actually was saying that the markets were finally following the technicals after there was another announcement of a new variant of the virus.
Exactly. We were at that inflection point, and it just so happened to coincide with this news item. It was a perfect excuse to unload. So I agree.
So I guess that leads us to our action plan. What should all of our viewers be thinking about moving forward to really prepare them to understand more about sentiment? And I will go ahead and let you go first.
Yes, of course. And it is going to circle back to what I already reviewed. Stay on top of where those sentiment really induced types of areas of the market are. Are small caps trending upward? Are riskier assets such as biotechs, are they under accumulation, or are the investors a little more uncertain and fearful? And then, of course, I did share with you that the bonds, so stay on top of action there as a way to gauge. And for quite some time, it was gold. It was always gold was viewed as the safe haven. There has been a shift this later in this year where cryptocurrency is now being viewed as a hedge. So that's one other area that you can stay on top of.
Right. That's been a really interesting phenomena that we're seeing with crypto. I think that's also possibly been putting a little bit of pressure on gold, which used to be that area that people would fly out to. And you're just not seeing that right now in the gold markets.
Right. It is very interesting. A little bit of a shift, which could be monumental because that gold standard had been in place for, I would say, 100 years, but certainly for many years.
For a very long time.
Right.
So let's say my action plan, I talked about the volatility index. It's an indicator that you can find just about anywhere, not just on StockCharts. And my action plan to you is to study a VIX chart. Follow those tops and those lows and see the reaction when the VIX gets very overbought or very oversold. And see if you can start picking it out yourself when those possible reversal points might be in effect. And of course, that does bring me to the fact that I do work at decisionpoint.com. And one of the charts that we do look at on every market day in the DP alert is the VIX chart. And we also talk about climax analysis. There's some other stuff going on there, but I would invite you to come check us out. We always have a free trial running. And I think it would be an excellent way for you to start looking at sentiment.
Yeah, because it is so important. It is such a driver. And certainly with my work at MEM Investment Research, I'm all about staying on top of the markets, staying on top of any potential rotation that's taking place. And during periods of bumpiness, if you will, I have my report now coming out on Sunday and Wednesday. But if there are bumps in the road, you will get Monday, Tuesday, and Thursday alerts. And it is going to be all about staying on top of that sentiment and then also the markets, how they're responding. So you want to be on top of those shifts.
I agree with you wholeheartedly. So that is our action plan. That is our anchor point of sentiment. I think we've wrapped it all up pretty well here. And we are happy that you joined us today. And we do hope you join us every week on Thursdays. At what time, Mary Ellen?
Well, it's in the afternoons. It depends on what coast you're on.
That is very true. 5 p.m. Eastern, I believe, is our timing for the Chartwise Women Show. But you can find all of our episodes on StockChartsTV.com as well as on YouTube. That's all we have for you today. Happy trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.